Hey everybody, how are you doing? This is Uncle Steve. Nice to have you visit on my inaugural video of Uncle Steve on YouTube. Going to cover a lot of subjects. Hopefully you'll find them interesting. Some will be entertaining, some will make you happy, sad, mad, pissed off, whatever. I'm not sure, but either way, we're going to bring them. If you like what you see, make sure you hit the subscription button on the lower right and add some comments. Keep them clean, people. Okay, a couple things I wanted to talk to you about here today is it's more of a business issue. It's a financial warning, if you will, to investors throughout the world who are blinded by the media today and what the media has been promoting, and also an opportunity for people who might want to do something, could take a small risk to maybe do something great in their life and make a big change. And what I want to do is I want to talk to you about the investment bubbles that exist and are about to be popped in the marketplace today, and I'm referring to the stock and the bond market. So what I'm going to do is I'm going to give you my thesis or my theory as to why we are actually in a bubble, an overly inflated bubble that's been inflated by the financial fraud of the central banks and specifically the U.S. Central Bank, the Federal Reserve, and banks around the world, and promoted by the media over many, many years now. And there is no way that that's going to end well, and why we're going to talk about why that is going to end and the catalyst coming up that we think is going to cause it to end. So there's an opportunity for you to either protect yourself if you believe it. If you think I'm full of shit, don't do anything, obviously. If you believe in what we're doing and you can take a small risk and want to do something great, this is it. This is a lifetime opportunity for me and my partners, and we are looking for one other person. If we could find the right person who wanted to do something really great in their life and can act quickly. Okay, how did we get here? Why are we in a bubble? Well, since the financial crisis of 2008, the Federal Reserve in coordination with other central banks around the world has been pulling a Ponzi scheme, which is called quantitative easing. In essence, it's a coordinated activity to artificially elevate the price of treasury bonds, government bonds, corporate bonds all around the world to drive down interest rates. It's important here, I don't want to get too complicated for you to understand that stocks and bonds both have an inverse relationship to interest rates. When interest rates go up, stock and bond prices go down. It's always been that way since the beginning of time. It will be that for the rest of time. That doesn't mean on every single day or every single week that correlation has to hold. But if you want to know what to do in the market and interest rates are moving down, stock and bond prices are going to do well. If interest rates are moving up, you need to watch out and you need to be very careful. And we are at one of those times today. So since the financial crisis of 2008, 2009, what happened is the Federal Reserve and the banks around the world, as I've said, have promoted a policy called quantitative easing to purchase credit instruments, bonds, corporate bonds, government bonds all over the world to artificially drive interest rates down. They told everybody for the last 8 years that don't worry, investors, you never need to worry about things going down because interest rates can never go down. They're not going to go down for as far as the eye can see. They're going to be low for an extended period of time, as if they know. And so as a result, what's happened is more investors than ever have thrown out the concept of risk, of caution, and have piled into both the stock and the bond market with the concept that rates can never go up. So if rates are never going to go up, how am I ever going to get wiped out? How are we ever going to lose money in the market? And for most part, that's held for the last 7 or 8 years. But I'd like to say to my partners, as I would say to you today, that all investment trends, they always work until they don't. They always work until they don't. Keep in mind, markets take the stairs up, but they take the elevator down. Bubbles don't pop slowly. This one will not pop slowly either as well. So as investors have believed for many years now that rates could never go up as far as the eye can see, they piled onto the Titanic. And they crowded that Titanic, standing room only on the Titanic, standing on each other's shoulders, head and shoulders, hanging off the rafters of the Titanic, because that's a boat that can't possibly sink. Everybody told us that on CNBC, on Bloomberg, on all the financial news networks. You can't possibly have interest rates go up. That'll never happen. You silly, silly man. Now let's talk about what's happened. So the entire world has bought into that story. But let's see what's happening here in recent history, very recent, and what might happen tomorrow. On October 1st of 2016, the 10-year Treasury bond had a yield of 1.5%. On election night, it had a yield of 1.7%. So rates had started to move up prior to the election. Now, when Donald Trump was elected, because we believe his policies are going to be very inflationary from the standpoint that infrastructure spending, tax cuts, trade renegotiation, health care are all very, very inflationary, and inflation is a toxic poison to financial assets like stocks and bonds. So on election night, the 10-year Treasury bond was yielding 1.7%. As of today, last quote I saw was that the 10-year Treasury bond is yielding 2.3%. That's a significant jump in interest rates in about 3 weeks. The value of those bonds has lost 20 to 25%. So we've got this crowded theater, or this crowded boat, this crowded Titanic, and it hit an iceberg on November 8th. But rather than having 1,000 people on the Titanic, it has 1 million people on the Titanic. So it's not a question of if, it's a question of when. And we're going to tell you why we think the when is coming quicker than you expect. On December 4th, Italy is going to vote, and we believe, we don't know this for sure, but we believe they're going to vote like Great Britain did to leave the establishment behind and their globalist policies, just like the U.S. did to leave the establishment behind and their globalist policies when they elected Donald Trump. We expect Italy to do the same. That's like taking the second leg out of a three-legged stool. What's going to happen to the stool? So that comes up December 4th. The first day for market trading will be December 5th. The next event, the next catalyst for a sharp, unexpected, dramatic leg down in the stock and bond market is going to come December 14th when the Federal Reserve, against their will, brought kicking and screaming, is going to raise rates for the first time in a year, or expected to raise rates. Whether they do or not, what we know is that we know that interest rates have risen very, very sharply. So the most overly inflated balloons that have been inflated as a result of fraudulent, phony economic engineering by the Federal Reserve and the central banks around the world, the party is over. The pin is moving towards the bubble, and the bubble is going to pop. And when that bubble pops, there's going to be no time to call your broker or your investment advisor to tell them to get you out. I don't want you to be sitting there in 60 days and go, oh my God, look at what happened. How could this have happened to me? Don't be a sucker. Don't be a sheep. Be smart. Sell now. The Dow's at 19,100. The NASDAQ's at 5,400. Treasury bonds are yielding 2.3%. If you miss 0.5% on Monday, the market goes up a couple points without you, it's not going to kill you. You're going to have another opportunity, but this market must reevaluate itself, and it will do that very quickly. If you would like to join us in a speculation and can take a small risk for the greatest transaction of your life potentially that has no legal or practical limit of any kind, contact us at statelinecapitalpartners@gmail.com. That email address should be right below you. Come back. We're going to see some less serious videos in the future, some very serious videos in the future. We're going to get into comedy as well. But today, this is a financial warning. Watch out for the stock market. Watch out for the bond market. They are not safe right now. Don't kid yourself. Protect yourself. Do something about it. Peace out. Come back and see me real soon.